Hey, welcome back. So today I want to answer two questions that trip almost everybody up when it comes to life insurance. Number one is how much do you actually need? And number two, maybe the more important one, is how do you make every single dollar you spend on it work as hard as possible? Now, because most people either buy way too little or way too much, or they buy the wrong kind entirely, we're going to fix that. Stick with me to the end of this video because that's where I show you how to get coverage and build savings at the same time. Let's get into it. So, first is how much do you need? Well, it really comes down to two things. One is your budget, what you can actually afford, and two, how much money do the people you love need if you're gone? And who are those people? So let's make it real. Say I'm a dad, I've got kids, a family. I look at my monthly expenses, and let's say it's $9,000 a month. That sounds like a lot, but if you've got a big family, you know that's a very real monthly burn rate. So $9,000 a month mean I need to be bringing in around 100 grand a year just to keep the lights on. So now the question becomes, how long do you want your family to be okay without your income? If I've got $100,000 policy, my family gets by for a year without me. That's it. If I've got $1 million policy, they're covered for 10 years. So here's the rule of thumb I go by: at least 10 times your income. And honestly, up to 20 times if you can swing it. So if I make 100 grand a year, I want a minimum of $1 million in coverage. So my family can get by at least 10 years without me. So here's the way somebody once framed it for me, because how to dial this in. This really stuck. If you were gone, how soon would you want somebody sleeping in your spot? How quickly should your wife replace you, or should your husband replace you? So how long are you okay before someone else is in that spot providing for your family? Because if you don't provide for them in your death, they may be forced to go find that somewhere else. That's the whole point of insurance. You're protecting the people who depend on you. So there's two types. Now that you know a rough number, the next question is kind of what insurance to buy. And there really are just two. You've got term, which is temporary. It ends. And you've got permanent, which, you guessed it, lasts your whole life. So let's start with term. Term is a fixed period. For example, 10 years, 20 years, 15, whatever you choose. If you buy a 20-year policy and die inside those 20 years, family gets the full million. If we live past the 20 years and we don't die, the policy just ends. I can go get a new one based on my age and health at that point. Now, here's why term is cheap. Statistically, 99% of the time, it never pays out. Think about it. I buy a 20-year policy at 40. I hit 60. I'm still alive. The policy never paid a dime, but my family got something better. They got me, alive, earning income, and providing for the last 20 years. So term is everywhere, and it's the cheapest way to protect your family because the insurance company knows you'll probably outlive it. And for the families where someone doesn't outlive their policy or doesn't make it, the money is there. Nobody's choosing the money over the person, but you still need the protection in place. Term is the cheapest way to get it. Now let's flip to permanent. With permanent insurance, I'm covered if I die. I am not covered when I die. And we're all going to die eventually. So the policy is guaranteed to pay out, which means naturally it costs more. Why would somebody want that? Well, a few reasons. It can help cover taxes when our family inherits money. And one of the most important things about life insurance in general is the payouts on all life insurance is tax-free to the beneficiary. That's huge. But for a young family, $1 million policy is usually expensive and honestly a little inefficient for a permanent. That's why most young families start with term. It's affordable, it gets the job done. The catch is once the term ends, there's no benefit left. You've got nothing to show for it. So here's where it gets interesting. And this is the part people never hear, if you will. The real advantage of permanent insurance isn't just the lifetime coverage, it's savings. What if you could be fully covered and build a tax advantaged nest egg at the same time? I'll use a glass of water to explain. So we have a glass of water. Let's say I buy a term policy for $50 a month and it gets me $500,000 in coverage. Every dollar of that $50 a month goes straight towards the protection. If I die, my family gets the payout. Nothing more, nothing less. So now some permanent policies, like an IUL or certain whole life policies, have what's called a cash value component. It's basically a savings account attached to your life insurance. Term policies don't have this. They only exist inside permanent ones. So watch what happens when we put in more. Okay, let's say we pay $200 a month into a permanent policy. Of that, $50 covers the insurance. Say $150,000 death benefit. It never expires as long as we pay. And the other $150, that goes straight into the savings component. And here's the good part. The savings grows in an indexed fashion, somewhere around 4 to 6%. That's a better growth rate than any normal savings account. And we can borrow against it. I can pull tax-free income from it in retirement, or I can use it as an emergency fund. So we have one account doing 3 jobs. Now, are you noticing the gap here? Because if I need 500,000 in coverage, this only gives me 150. So how do we close that? Simple. We supplement it with some term. You layer them. Permanent for the lifetime coverage and the savings, term to fill the rest of what you need right now. So to bring it back and bring it home, if there's a single person on this earth you'd want taken care of if you were gone tomorrow, you need life insurance. Full stop. How much depends entirely on you, your income, your family, your budget. If all you can afford right now is term, $50 a term, start there. As your budget grows, we can layer in the permanent side and start building that savings. The real question is, where do I spend my next dollar to make it most efficient? Where do I save that to be the most efficient? So, number one, if I die, my family has the money. Number two, if I don't die, that money's liquid. It's growing at a reasonable rate, and I'm saving on the regular. That's the power of what a permanent policy can do. That's it for today. If you got questions, reach out to me directly. I'm always happy to help. I'll keep posting real educational stuff instead of the usual noise. So come find me.